Welcome back to the Prepared Mind channel. I'm John, I'm the host, and man, have we got some stuff to talk about tonight. That's right, it is tonight, not in the morning when you get to see this. Today's news was really big, and while it's fresh in my mind and while things are happening, I wanted to talk about it with you. As you know, or you may not know, 4 years ago plus when I started this channel, I did the top 10 things that I thought would lead to shit hitting the fan. And in that top 10 was an economic crash, an economic collapse, a financial fuck-up. Right? And we're right now in the middle of another one happening. Now, there's a lot that goes into this. You know, this isn't an economic channel per se. It's not an investment channel per se, but we do talk about economics and their effect. One of the phrases or thoughts or ideas that's been axiomatic to me my whole life has been this: money is the root of all evil, right? Is that biblical? I don't know. They had silver and gold back then. I don't know if they called it money, but anyways, money is the root of all evil. In other words, when people do things, there's usually a motive or agenda behind it, and it's for power and money buys power, and power gets money. So money is the root of all evil. So if shit hits the fan is a bad time, meaning evil things are happening, you can bet your ass that money is going to be at the root of it. And what we had today was the Federal Reserve Chairman, Jerome Powell, come out, right, and do his FOMC press conference. And they do this every quarter, and he came out and he talked about the economy and what they're going to do. And if you remember, just a couple quarters ago, they were going to raise interest rates 2 more times here in the year 2019. Well, he came out and he said, we're not raising the rates at all this year. And we're going to raise them 1 time in the year 2020, which cracks me up that they think they can forecast that far ahead. You know, but they're playing an interesting game. So I guess they should be able to, but if we were going to raise interest rates twice this year, and now we're going to raise it none this year, what makes them think they can forecast what's going to happen in 12 months? Right. In other words, if they were to raise interest rates, it would put burden and expense on business, on people, on the government, and it would completely and totally crash and demolish the economy. So they can't do that. They can't afford to do that. What they admitted to today, what the chairman admitted to, is that the quantitative easing that was started by Benjamin Shlomo Bernanke, Federal Reserve Chairman, 10 years ago under the Obama administration, when they said, we're going to do this quantitative easing, it's a one-time deal, we're going to pump this money in there, and it's going to inflate the economy, and everyone's going to be happy, and it's going to produce jobs and income and taxes. Well, they did it 3 times, and then they continued to play games with the Exchange Stabilization Fund, the Plunge Protection Team, and other incentives, shall we call them, that the government gives to private industry, banking, corporations, in order to make them prosperous, right? So they did that, and they were saying, oh, this is going to fix everything. But by Federal Chairman Powell today coming out and saying we're not raising rates, it was an admission that the government has to, through the Federal Reserve and the Treasury, they literally have to support corporations. The public economy has to be supported by them with cheap, easy money, or it will fail. In other words, they admitted what they did 10 years ago failed, what they're doing today is failing, and that the system is going to fail in the very near future. Really interestingly, Chairman Powell came out And I watched as much as I could. It was live. It was at my work. I was trying to take lunch. But I could have sworn that I heard him say that we're going to have to deal with this sooner or later. Hopefully you guys heard something similar to that or something along those lines. I really heard the man saying that things are not good. And there's some reading between the lines. Some is reading body language. Some is psychology. Some is watching his eyes, his facial expressions, the tone of voice, the confidence in which he spoke. Right? He went from being hawkish, meaning we're going to do quantitative tightening last year in the fall. We're going to raise interest rates. We're going to restore everything. We're going to sell off Federal Reserve debt. Right? Very hawkish, tough talk, in other words. Now he sounded like a very weak person. Very apologetic. Right? We're going to take it easy. We're going to be neutral. In fact, they use the word neutral. Right? Neutral is not offensive, not defensive. They want to be neutral. In other words, they're trying not to take a stand at all. He's wanting to sound like Switzerland in World War II. We're not on anyone's side. Don't attack us. Right? He doesn't want to be blamed for being aggressive or being passive. But being neutral really is passive. It's quite interesting. The market reaction to Chairman Powell's comments was startling. Some commentators I listened to earlier in the day said that we could expect gold and silver to take a big hit as soon as he talked. Because everyone really knows. Everyone who's in on the know and pays attention at a higher level or a more educated level, we know what he's going to say. We knew that he's not going to call for more rate hikes. That would be a shock if he was going to call for more rate hikes. But he threw out 2020 just as a little bone for those people. We knew he couldn't reduce interest rates because that would be more than a 180. That would be a 180 flip from what he said before, and then some, with some nitrous oxide on it. Right? It would be a total admission that the economy is completely failing and they need to lower rates instantly. Right? And then right on the heels of that would be more quantitative easing and more more cash pumped into the system. But the psychology behind him, the way he looked, the way he spoke, the words he used, the economy's in big trouble. The markets reacted. Gold and silver didn't go down. In fact, they spiked up. They spiked up above and beyond the manipulation that drove them down right before the speech. The Dow also took a wild ride up. And then it started to come down again as if it was confused. And in some of the aftermarket trading, the Dow futures, that has been very confused. Additionally, and probably most important of all, the bond yield took a crap after the chairman spoke. Now you would think that, well, hell, the government's going to pay less to borrow money. So that's good. They can borrow money cheaper. Well, who do you know is going to borrow money, or lend money rather, to the government that they can have even cheaper than they had before? Once again, if they're borrowing money from bond buyers at 2.5%, and the rate of inflation is a minimum of 2.5% and closer, in my estimation, to 8%. Who would do that, right? There's no incentive to do that. It's a money loser. It's a money loser. But what was fascinating is I listened to the reporters ask questions. And some of the questions out there were softballs. But some of the questions were rather pointed. And one fellow, and I can't remember his name or who he is with, asked about the yield curve. The yield curve. The bond rates tumbled as soon as he started talking. And what has happened is, let's just say you've got a 1-month bond you can buy from the government, meaning you lend them money for 1 month, and after 1 month they pay you back plus interest. Or are you going to lend the government money for 10 years? Right? Well, if the interest rate is higher on a 10-year bond, you might go that way. But if the interest rate on a 1-month bond is higher than a 10-year bond, why would you tie your money up for 10 years? So you would buy the 1-month bond. So when you're getting paid more to lend money for less time, that's when it's not flat, but rather inverted. The yield curve is inverting. It's flat. In some places, it's the same yield across the board. In other places, for lower timeline, shorter yield or shorter term bonds, they're getting paid a higher yield. When that happens, at times when the economy is weak, we go right into a recession. A recession follows very shortly. In other words, the announcement of no more rate increases, the announcements during the FOMC meeting, resulted in the yield curve completely playing its cards, showing its hand. Now, what's interesting is now we have an unofficial announcement, or rather more clues or more indicators economically showing us we're going into a recessionary mode. We had our kickoff last February. We had our December crash, our bear market correction. We've had a flattening yield curve. We've had a flat yield curve, and now we have inverted yield curve. There are many, many indicators, and if you belong to Pentoport.com, Michael Pento's his website, or if you subscribe to TF Metals, which I'm subscribed to, and others, you'll start getting this information. Lior Gantz, go to Rob Kirby, go to Jim Willey, go to Jim Sinclair, JS Mindset. There are so many different places you can go to get real economic news. You'll see these indicators, and they are like red flags going off. And today was a massive number of red flags. Massive number. We're going to see the economic downturn begin. Now, just the other week, I noted with you guys, they're talking about how they're going to dismiss Q1, or first quarter, January, February, March. The economic results coming from this quarter are going to be dismissed out of hand, because they're going to say, oh, it's just the winter, and it was a bad winter, and it was cold, and well, we had the stock market correction that's now been recovered from December, and that's what caused it. Really, everything's fine. They're dismissing everything out of hand. But the facts are, we're seeing some incredible economic bad news. Incredible bad news. And money is the root of all evil. A lot of commentators are saying this is going to be a huge wealth transfer. And I've talked about this in my layman's terms in the past. Money isn't being destroyed or stolen from the American people. It's being transferred out of their account and into somebody else's. So these big banks, these hedge funds, day traders, anyone who goes to the stock market and puts in $100 and takes out $110, they didn't make $10. They didn't produce $10. They didn't inspire a corporation in one day to make a bunch of wealth. What they've done is they've done some creative trading, and they've taken money out of the market, and they make their income by stealing from everyone else. Maybe it only cost you 1 penny, but if it costs 10 million people 1 penny, right, those people all lose a little bit. So when we have a stock market crash, that money isn't lost. It didn't evaporate or catch on fire. It was transferred from your account to another account. And when things like that happen, it's not day traders that cause billions and trillions of dollars to disappear. That goes into major banks like Goldman Sachs or JP Morgan or Citibank. They're the ones who really, really profit by this. So today was massive. The yield curve, the bond, the reason that's so important for us to think about is that the U.S. government funds itself by selling bonds. Right? They need to get more people to buy the bonds, so they should have to raise their rates. But there's just, everything is cattywampus. Everything is backwards. Nothing is working the way it ought to. And this is what happens on the downturn in what I'm going to loosely call an economic cycle, because it's also important to understand that we used to go in business cycles, and that would be that a business would start here. They'd borrow money and make money, and borrow money and make money, and make money and borrow money, and they would go up to a point where the economy could no longer sustain that kind of growth. And then it would turn down, and we'd go down in the business cycle a little until the business that was being created met the demand by consumers, and then it would start to go up again. Borrow money, make money, borrow money, make money, and it would start to go up. And that was called the business cycle. And we would see every 7 to 10 years, let's say, an economic downturn, a recession. Well, we got to 2008, and it was an artificially induced economic cycle or business cycle. And what they did was they turned that into what's now being called a credit cycle, where they pumped QE money in, and it just goes straight up, right? And it'd go sideways and straight up, and they would pump it up with quantitative easing, with cash, borrowed money. It no longer became a business cycle. What do the consumers want, and what can business provide, and follow a supply and demand type curve. Instead, it became a credit cycle where cheap, easy money was heaped on top of business, on top of banks, and told, go out and make the business happen, and the people will buy your stuff, and let's make money cheap so the people can borrow it. Cheap money is credit. Credit, credit, credit. Cheap, like credit cards, loans, right? So people could borrow cheaply. It's a credit cycle. We've come to the end of that. It's exhausted now. We went from a business cycle to a credit cycle. Now everyone is up to here in debt, right? You can give them more credit, but they can't even afford to make the payments on the debt. So the credit cycle has its limits as well. So on top of the debt cycle, now we have the credit cycle, and it's come to an end. Now the Soviet Union, when they crashed, they didn't go into a quantitative easing, hyperinflationary, money-creating printing press where they destroyed everything. They had very, very, very hard times. They had monetary problems, economic problems, financial problems, but they went through it, and they've come out. They didn't do the printing press, inflation, hyperinflation scenario, but it looks like that's where we're heading, because the Federal Reserve now has two choices. They can print money, quantitative easing, or they can default and tell their creditors to fuck off, right? People will tell the bank to, everyone tells everyone to fuck off. It's called a default. And it is a technical default to go into hyperinflationary printing of currency. It's technical. But what that does is it kicks the can down the road, because they just print more money and everyone thinks everything's fine. Everyone runs to the market with more money, and then people realize their money's worthless because there's so much of it. It's not based on anything. And speaking of basing money on things, at the end of this month, March 31st and starting April 1st, Basel III, at the Bank of International Settlements, the World Bank of World Banks in Switzerland, they have rules, and they've decided several years ago, and it's funny how it's all coming to play at this exact moment. Talk about a fucking agenda playing out perfectly. Gold becomes real money again. Now, if you go back and you listen, type this in on YouTube. Type in Bernanke and Ron Paul and gold, and you'll hear Ron Paul ask Benjamin Shlomo Bernanke, Federal Reserve Chairman at the time, is gold money? And Bernanke says no. And Ron Paul says, well, it's been money for 5,000 years. And they had this exchange, and it was very educational, very telling. But, so 10 years ago, gold wasn't money, but guess what? In a couple weeks, 2 weeks, gold is going to become money again. And because of that, the banking rules are changing to accommodate that. So what have banks been buying? They've been buying precious metals. They've been buying gold especially, because gold is going to become money. In other words, If a bank has money or gold right now, it's worth 50%. In other words, the gold they have, they can say this is a bank asset. Because we have this much asset, we can loan through fractional reserve banking 10 times that amount. Well, if you have gold now, it's not 10 times because the gold is now doubled, so it's going to be 20 times. In other words, gold is going to become an asset to them that is going to become exponentially more valuable. It's going to be an asset that's real that they hold, unlike debt. See, when an economy collapses and people have a bunch of debt with the bank holds that debt or those loan notes, those obligations, and said, these are our assets. They're debt assets. They're debt obligations. And so they have value. But it's not real. It's paper. It's poof. But gold is real, and it's real money. Gold and silver, precious metals, are real money. And the banks have been acquiring them while they've kept the prices suppressed for the last 5-6 years. They've kept them suppressed. And people go, why? So they can acquire them all. The banks have been buying up gold for years now, especially Russia and China, because they knew, everyone has known, the banks have known for years now, especially since they changed these rules and said they'll be implemented on April 1st, 2019. They knew that gold was going to change. And so they've been buying it knowing that it's not going to just be worth a little more. It's going to double for them as far as bank value. Right? If they can lend $10 to every dollar they have, if their gold value doubles from 1 million to 2 million, from 1 billion to 2 billion, now they can lend 10 times that. So if we keep with a fractional system, fractional reserve system, they're going to be able to lend a lot more. In other words, they're going to be able to increase the liquidity of the bank. It's 100% gain for them overnight. From March 31st to April 1st, every ounce of gold just pop, 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 pop. Would it behoove you to have gold and silver? It's a risk. It's a gamble. But when you hold your money, because it's now money again, it can't be taken by some asshole making a trade in New York. It's real. This video I wanted to do because I needed to wait for the chairman to do his speech and to see the market reaction and then talk about what this means to us, right? I had a little bit of wine because I needed to relax. This is a pivotal moment in world history. We've had other pivotal moments. We had the gold confiscation of the 30s. We had the Bretton Woods Conference. We had the gold window closing. We had the 2008 crash. We had quantitative easing. And now we're getting to a point where they're going to make gold money again. A couple years ago, we talked about the petro yuan becoming discussed. And then it became real last year. The gold standard is being talked about. In other words, we're going to see a major change in the way money, finance, and investments are done throughout this year. As the markets, right, we're seeing a huge change over here, while over here we're seeing valuation changing. I would not want to have $100,000 of Apple stock or Amazon because it could be worth half or 20% of what it was just a short while ago. The predictions are we could see anywhere from a 30 to a 50 to an 80% reduction. Some people calling for 90%, which was the stock market crash of 1929. That type of correction in the stock exchanges. Whether you're talking about the Dow or the NASDAQ or the Russell or the S&P, it doesn't matter. They're going to see huge changes. This is coming now. And money is the root of all evil. If you're an evil person, you're going to be greedy and you're going to be trying to steal from other people. Owning gold and silver is owning and retaining your effort and your work. You're not stealing from anyone else. You're not a bank robber. Right? Working for 10, 20, 30, 40, 50 bucks an hour, you're not a bank robber. But the people on Wall Street are bank robbers. And they're getting ready to pull off an enormous heist. Right? They're already buying the gold so they can capitalize on that. They're already consuming the silver so they can capitalize on that. And it's going to get really exciting. Very exciting. And not necessarily the good kind of excitement, but it's an excitement that I've anticipated for a long time. I've been fearful of, and I've been planning and prepping for. Food, water, shelter, clothing, medicine, means of self-defense. Be a prepper, have a plan, understand what's going on. That's what we're doing here. I want to thank you guys again. And I've been doing an awful lot of talking today, as you can imagine. My voice is very hoarse, but I had to get this video out to you guys. Very important, and I want to thank you for sharing your thoughts and ideas. I want to thank you for supporting us, and I want you to be prepared. Money is the root of all evil, and the pursuit of that wealth, stealing it from others, is what's driving this. Power and money. Follow the money, cui bono. So for all of you, Semper Fi and Godspeed. I'll talk to you tomorrow.